Good morning, everyone, and welcome to the Quantum Leap morning leap session. Each morning we get together to take a look at the structure of the market and identify our trade levels and our targets and our hypothesis for the day. I want to say Happy Canada Day to all of the Canadians in our group. It is Wednesday, July 1st, Canada Day. If you're looking to get more information about Quantum Leap Trading, we've been around for about 6 years in one form or another. We're just a private group of traders. You can send me a contact information in the sticky note here at quantumleaptrading@gmail.com or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada, and I can give you an invite to our Quantum Leap chat room. You will need a Skype account, but it is free to open one. Before we get going, let me just get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investor could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative to future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own trade plan and your own risk parameters. Okay, so let's just start with the news. Of course, the big news is still going to be coming out all week. That is the default of Greece for the IMF, and the fact that there's a referendum coming on July 5th. This morning we did have some news at 8:15. We had ADP non-farm employment change came out, expected 219, came out 237, previous was 201. So that was some somewhat good news, although it really didn't do much for the market. 9:45 Eastern, we have final manufacturing PMI, and then at 10 o'clock will be the big news, ISM manufacturing PMI, construction spending, and ISM manufacturing prices, and then we've got crude oil inventories. But of course, we're expecting some more volatility and some wild rotations as this market tries to determine which and how this Greek news is going to affect us. So each morning I like to start off with just a basic chart. It's a candlestick chart with a 9 EMA and 20 SMA. All the moving averages you see will be, and basically it's a routine that I do each morning to just look at the macro to the micro view in terms of where we are in the trends and the strength of the trends. What I'm looking for is whether or not we have good slope and separation on the moving averages and whether or not the trend is being challenged or not. You can see on the monthly we've got good slope and separation. We do have a little bit less slope and a little bit less separation, but we are holding the 9 EMA, so the trend on the monthly is still very strong. On the weekly, we did gap down. The half gap fill on the over weekend gap down is 85.50. Write that down in your journal. But we do see some weakness, the first weakness coming in on the weekly. On the daily, we've been watching this head and shoulder pattern, and the measured move, the 61.8% extension down brings us down to that 2019, and then 100% brings us down to the 1990 level. We do have the gap contend with. We do have a start of a trend down, although we did have a technical gap. We're coming up to close that gap. That gap will be closed in around 80, 50, 81. But we are seeing some weakness, and you want to pay attention to the 2060-50 area, which I'm going to show you on the composite in just a couple of minutes for continuation further lower. But I think we're going to get a little bit of a rally at some point in time in the next couple of days as we move towards July 4th. Typically, this is a pretty positive period in history. Going down to the intraday to see if there's any trends coming into the RTH session. You can see that we've had the strong trend down. I've been talking about it for a couple days now on the 4 hour. We've now rotated back up through the 9 and the 20 and are holding above both. So we are challenging the downward trend that we had. Going down to the 30-minute, yesterday we were talking about the naked crosses that we had on the 15 and the 30. You can see there's the one we were talking about yesterday. We were looking to see that being closed out. They came up and closed it overnight. You can see that it's been closed out now. Same thing on the 15-minute, but you are seeing that we are starting to get a trend up on the 30-minute. We've got slope and separation, and we're holding above the 9 and the 20 right now. And then just going down to the 15-minute, again, you can see that naked cross. These naked crosses, they have a high probability of getting closed out, especially on the intraday using the 30, the 15, and the 5-minute. You can see that we've got a little bit of a trend going, but we're challenging the 20 SMA, but we're holding it right now, but we've lost slope and separation. So almost a bit of a flag pattern coming up on this. I'll take a look at this after and put a chart in the trade room for you. And then on the 5-minute, you can see we've got more or less consolidation in around the 71 area. The 71 is a CHVN on the composite. So let's go to the composite and take a look at that. You can see that we're trading right here at the 71 and a quarter CHVN. I'm just going to bring this in the larger picture. We've been watching and following this micro composite for a long time now. The value area low is shifted up to 62 and a quarter, and the value area high is still at that 2108. It was 2108.50. It's now 2108 and a quarter. But the microcomposite VPOC has shifted up to 93.75, where it was at 87. And remember, the half gap fill is going to be in around 85. We still have some repair to do to the auction in this level right now. Below us, we've got the 68 and a quarter. I'm going to be watching closely this morning. Our high from yesterday is 67.50. I'm going to be watching those two levels, whether we get back inside of our profile from yesterday. We do have a single print on the, I'm just going to veer from here for a second. We do have a single print that should be taken out sometime on the open here. You can see that the profile here was pretty balanced. Our POC is at 2055, but we have a single print above us from the prior day up here at 2071.50. What I do expect this to be taken out and challenged on the open. It's still open even though we're up here trading it, because it has to be closed out in the RTH session. Going back to the composite for a second. The big distribution zone is between 2100 and a quarter and 82.50. If we get back up above 82.50, I'm looking for continuation up into the 87, at which I'll be waiting to see if we get a microcomposite VPOC shift back down here. It's not going to take a lot of contracts to have this shift. Remember, a half gap fill is 85.50. The FOMC number 84 and a quarter. Those are your two immediate targets if we get above this 82.50. If we hold below the 82.50, I'm looking for a rotation in this double distribution zone between 75 and 66. And the big number below us is still going to be that 59. So let's take a look at the overnight and start moving our numbers over. You can see that our overnight is a double distribution, very distinct double distribution. You can also call it a triple distribution. We opened up at that 54.50 area and rallied. You can see that this area right here at 67.50, which is our high, RTH high from yesterday, and just above the open at 67, is clearly at LVN. This is going to be my main trading level today. Now, anytime we open above range and above value, we have to watch for initiative buyers to step in and we could get a quick move on the open up towards that 75.75. Definitely the overnight VPOC at 71 should be challenged. So we have our overnight VPOC at 71. Keeps shifting. Now our overnight high is up at 77.50. And our overnight low is all the way down at 54, 54 and a quarter. Near our gap, our close, our naked close from yesterday is 54.50, and our overnight low is 54 and a quarter. And then of course we've got this LVN area from overnight between 60 and 59. This is going to be a very important level. Our value area high right now from yesterday is 59.50. So this is going to be another critical area, and basically my key line in the sand for for continuation lower. Why? Because it's going to put us below that 62.50 value area low from the microcomposite that goes all the way back to the beginning of February, and it's going to put us back into our value area from yesterday. And I would expect if we get back in this area that we'll get an 80% destination trade down to this 51.50 level. Above us, our first target above and our main target for the open is going to be this 75.75. Come on. And this is main target above range and above value. Can't type today. All right, and then the first real resistance that I'd be looking at. Look for responsive, sellers at the 75 level between here and the 77.50 overnight high. But the next level above is going to be this 79.75. And then if we get above there, like I said, look for them to go up. The target above 79.75 is going to be the 81.25. And look for continuation. I don't know why it keeps doing this. Excuse me for a second while I fix this. And then of course we've got the 84 and a quarter, and then just above that we've got the 85.50. That's the half gap fill. And then we've got the 87.50, which was the former microcomposite VPOC. That's going to be a trade area. I'm expecting if we get up there, we should see some responsive selling. And then the upper side of that balance is 89.50. And then above that, we've got a really nice target up here. We've got a naked VPOC at 93.50, and the microcomposite, the most traded price going back to the beginning of February, is 93.75, with the naked close up here, the gap close at 95.75. Shouldn't be there. I'm not expecting to get up this high today, but we've got to prepare ourselves for anything, especially when we're going to have a open outside of range and outside of value. Below 67.50, your first target below is going to be 66. Let me just bring this down so you can see these levels. That's the CHVN down there. And then below the 66, there really isn't much down there until we get to the 62 and a quarter. That's going to be a trade area for me. And then below that, I'm looking for a test of the value area low at 59 and a test of this LVN overnight between 60 and 59. And then inside of that, we've got our target, which is the naked VPOC at 57.50. It's also the 2-day microcomposite VPOC, or the most traded price in the last 2 days. And then look for continuation. There's a little bit of support here at 53, just below the overnight low and the gap close. You've got the IB low right there. I'd be looking to see if we get any responsive buyers down here. And then if we break below that, look for the continuation to the 80% value area. And then below 51, there's 49, but I'm really watching the low. We've got the two lows, the two RTH lows. We've got 47.25, and we broke that prior day low by 2 ticks down to 46. I still consider this to be a very weak low. So I'm expecting, if we get below value, to come down here, challenge this 46.50, find some responsive buyers, make a small bounce, maybe come back and test the value area low. But if we get back below this this 51 area, I'm expecting this 46 to be taken out, and the big target below us is the 42. Is it 42.75? 42.25. That's a naked microcomposite VPOC from back in late 2014. And below that, then you have the 40.25 as a trade area, and then our targets below, which are 37.25, 30.50, and then 26.75. But remember, our measured move on that head and shoulder pattern, the 61.8 extension of the head and shoulder, is that 19 area. And then that 19 area was a naked microcomposite VPOC that shifted from the June contract to the September contract, and my main extended target below still remains to be this 20.11.25. If if we get below this this range, I'm expecting to see continuation. We've got a pretty balanced day yesterday, so we could get some extension if we extension to the upside if we hold above value, a range, I should say. If we get inside a range, I'm looking for more of a rotational day. So really have to watch our open, and how they react to the open, whether or not we see initiative buyers. If you see initiative buyers, don't try to fade this until we get up into this 75 to 77.50 area. It could be a dangerous trade, and don't want you to get your face peeled. Wait to get short, okay, until we get below the 67.50 or come up into this area up here. So really, you want to be careful on the open, trying to short anything. Let's take a quick look at where we are in the Keltner channel to see how it fits. 71.75, remember that's that single print up above us, is the Keltner center line. As long as we stay below that, look for them to come down and test the 67 range high. You can see that the 24-hour VWAP is right there as well. And then if they break inside, a move down to the lower Keltner is going to bring us down into that 65.25 area. If we get back above the Keltner center line, a move up to test the upper Keltner is going to take out the overnight high at 77.50 and challenge the 78.25 level. Take a quick look at gold. As Mike had pointed out, there is a FUBAR Mr. Sneaky on the 15-minute, but I still see weakness in gold still. you would think that there would be a flight to safety in gold, and there hasn't been. I think everybody's absorbing all this news and really feel that there's going to be some type of resolution. So gold's not been a flight to safety. Balance still remains here at the 73. As I said yesterday, the key level for me is going to be the 6170 below us. If we get down here, I'm looking to see if we find some responsive buyers down here. If not, I'm looking for continuation down to 58, 46.90 with the big target below still down here at the 1128. Above, there's not really anything really good to trade up here. You can take the 74.60 break above that, our rotation back up into the 77.78. That's the longer term, microcomposite VPOC. And then with resistance coming in at 79.40. The key trade I'm waiting for, and I know it's way above us now, is this move up here at 1192.50. I'm sorry, 1192.40. If we get above this, this is going to be a nice trade right here. It's going to be easy money because we've got the the composite VPOC going all the way back to 2008 up here at 1220. So I'm waiting for this trade up in here. I think we're just going to see a lot more of the chop that we're seeing here. So the two levels that I would recommend would be 6170 and 7940, but definitely watch this 92.50 level if we get back up there. I don't think we're going to get up there right now, though. I think we're going to see some more weakness coming in on gold and a move down to test this 61.70. But you never know. Again, watch the open, watch for initiative buyers. If you don't see initiative buyers stepping in, look for them to come down and test the 67.50 level and then see how they handle this. Anything below this, get short into 66 with continuation down to 62.50 and 60.59 area. Below this, don't even think about it. Just get short into the 57. 75, and the gap closed down here at 54.25. But again, this period of time tends to be more bullish coming into the July 4th weekend. You're going to also have our bank holiday today here in Canada, and so you won't have too many Canadian traders involved in the markets today. I'm going to stick around and do some trades live in the room this morning. Up until probably about 10:30, then I'm going to take the rest of the day off and go spend Canada Day celebrating. As always, trade well, trade safe, and we'll catch you on the flip side.